What is happening, YouTube? It's Matt Faircloth. Welcome to the Mentorship Monday program. As I said, my name is Matt Faircloth. My company is called the DeRosa Group, and you guys can hear more about us at DeRosaGroup.com, DeRosa Group.com. I want to thank you guys for being here. I want to thank you guys for all your submissions to help me at DeRosaGroup.com. That is how you guys get on the show. Help me at DeRosaGroup.com. Fire an email off right now to that email address, or write it down and shoot it off, because you will get to be on the show. You'll get an awesome thank you, which is a free membership for 1 month to our Insiders program, which is a great way to see inside of the DeRosa Group and see inside of the assets that we own. Get to network with a few of our investors and many other the folks that are part of our Insiders program that are active real estate investors like yourself. It is a great way to learn the theory of real estate investing, and then apply it and watch someone that's really applying the real estate investing mechanisms and applying the things that we all learn in books and on places like Bigger Pockets and things like that. But then watching the application of it, maybe even playing a role in it or being a part of it, is what you guys can get out of Insiders. So you either get it for free for 1 month by going to emailing us at helpme@DeRosaGroup.com and submitting your question, being a part of this show, or you can just go and pick up your handy dandy cell phone right here and text the word DeRosa, my company name, DeRosa, to the number 66866. DeRosa, DeRosa, to the number 66866. And you will get a text message back with a bunch of free information, a bunch of free goodies, a bunch of cool stuff you guys can use to build your business. And most importantly, you'll get a link to join us at Insiders. So thank you very much for being here. Today, I've got a great guest. Let's bring him on the show now. This is a friend of mine who is local here in Trenton, and not here in Trenton, but local to the Trenton area. Comes a lot of our Trenton meetups. Let's bring him on. Let's bring on our first guest. What is going on, Dwayne?
Hey, Matt. How's it going?
I'm great, man. I'm great. Welcome to the Mentorship Monday program. I know you and I have networked back in the day when the world was normal and you could actually go out of the house and stuff like that without wearing anything on your face, and all that. When you wore things around your mouth, that's because it was cold, right? That's why we did that,
Big change.
Yeah, it's okay. We'll get back. We'll get back to that world, I think, or maybe it's to some semblance of it, and it's okay, And so I miss hanging out with you and the people at the meetup that we used to have in Trenton, but it's good to see your face, man. So
thanks for having me, man. Really appreciate
you're welcome.
You're
welcome. Thank you for submitting a question to help me at DeRosaGroup.com for Mentorship Monday, man. What can I do for you? How can I help you today?
Okay. So I'm a young investor here doing it in the Trenton and the Ewing markets.
All right.
I have a duplex that I purchased about 6 months ago. And the duplex is on a big lot, right? And it's a bunch of dead space. So as you know, Ewing can be extremely difficult with zoning and permits and all of that, as you know.
Tell me about it, man. Oh, my God.
Crazy enough, I'm approved to add on to this structure or this lot, this parcel, right?
All right.
So at this point now, I'm approved to add on at least 3 units, right? So I have an architect, and we're looking to add on three bedroom units, right? So I'm looking to convert this duplex into a 5-unit. Right. And that can be pretty cool, based on the valuation of a 5-unit opposed to a duplex. Right?
Sure.
So I'm kind of just trying to figure out if I'm analyzing this correct based on the numbers that I kind of have in the infancy stages with respect to the NOI, the cap rates, the additional taxes, and everything that's going to change drastically once I change this unit to a 2 to a 5.
Oh, Ewing will get you, brother.
Yes.
Ewing's going to get you, man.
I know.
I'm just letting you know.
Sure, I know.
Their tax assessor is no joke in Ewing, man.
I live in Ewing. I know.
Yeah.
So the most they could do for me now was just give me a rough tax amount based on the acquisition of the new home or the new modular or the stick built, whatever I built on the structure. And they just hit me with, okay, if you're at $200,000 for everything, we're going to multiply that times the tax rate of 3.45 whatever percent or something like that. So they couldn't really give me a lot of actual concrete numbers with respect to taxes, but I know that's just one of the things that I have to take into account for. I know there can be quite a few with respect.
That's not the end of the world.
Yeah, exactly.
So they're going to base it off of, let's talk through each thing. They're going to base your real estate taxes based on cost of construction, not new valuation, correct?
Correct. Yes.
Good.
Yes. Very good.
If they were going to do new valuation, then they're going to come in and try and comp you to a 5 unit that's somewhere else in Ewing, and they're going to come and throw an NOI at you and everything like that.
Yes.
And that's where you're going to like,
Yeah. Why did I do that?
200 grand times 0.3 times the 0.03 mill rate that you're talking about.
Yes.
You're like 6,000 a year, right?
Yeah. Plus the additional 5,000 a year I'm already paying for the additional duplex.
Yeah, but that's okay.
No, I'm happy. No. I kind of ballparked it at about 13 to 14,000.
Yeah. Roughly, okay. You know well, hey, that's a savings then if you get that. All right.
All right. So right now, just to get into this, I know you're a numbers guy. Right now, I have a duplex that rents for $2,000 a month. I'm trying to add 3. We are approved for the 3 units, so we're trying to put 3 3-bedroom units, and we're looking to do about. I'm just going to pay $1,325 a unit, right? Just for math, right? So right now we're at $5,975, almost $6,000 a month gross rents, right? So 6,000 times 12, of course, is 72. So we have gross rents of 72,000 a year, right? Mm-hmm. Subtracting our expenses, which would be taxes, insurance. I property manage because I'm just beginning, but I know in the valuation, an appraisal can take out 7% or 10% for property management. Vacancy, there can be a plethora of things that's going to, of course, eat at that gross rent to give you your NOI. So I'm right now at about, I think the last time I ran it conservatively, we're just taking off like 20 to 22,000. I kind of really don't know. So if we say 20 for simple math, right?
Off expenses.
Off expenses. If we say 72 minus 20, we're at $52K a year, divided by a cap rate of 10, maybe a 10 in Ewing. It's very close to Trenton.
No, come on, man.
No, that's what. Okay.
Ewing's a whole nother world, man.
Yeah.
Ewing's not Trenton. And I got somebody that I'm talking to buying in Trenton right now. They're trying to buy on a 9 cap. Right. So you're discounting yourself too much by hitting yourself with a 10. A 10 cap's like Beirut, man. I mean, like, well,
I'm very close to Trenton. Literally, this street, Matt, is right on this street is half of the street's Ewing, and on the other
what street's it at? Where you at?
Ingham, West Ingham Avenue.
I know, yeah. Okay. Yeah, I owned the buildings. My YouTube channel did a big. It blew up on this video I shot on Concord Avenue because I used to own a bunch of them on Concord.
That building's for sale now. I think.
I know.
That's a 20 unit. I've been looking at it.
I know the guy that owns that place, and he's told me bring him an offer, just so you know.
Wow. Okay. Cool,
so if we can talk offline about that one. That's 20 doors if you want to, you know.
I remember. I remember when you were closing. I seen the YouTube video. I think when you were going to closing to sell off those.
Yeah.
No, so that's good, Matt. If you're saying I'm at potentially a 9 cap, right? If 10,
you're an 8. You are an 8 all day long. You are at a 7.5 or an 8 cap all day long, right there. New construction, man. Come on, you're kidding me. New construction. You're in Ewing, but forget it. Yeah.
Okay. Well, it'll be partial new construct because the valuation I'm looking to will be the entire parcel, right? So it'd be all 5 units. So the
rising tide raises all boats, though, man. Because anybody that values that property is going to look at the whole thing all together.
Great.
So,
cool. That's
good.
But
I gotta. So I'm pumping you up, man. But I gotta take the wind out a little bit.
Go ahead.
20 grand's nowhere near not enough for your expenses.
Okay.
Yeah.
Okay.
So you gotta, your expenses aren't high enough. Let's run through. I wish my freaking whiteboard right here. Mm-hmm. But I'll just run through it real quick. Sure. So I got good news and bad news, right? Mm-hmm. The bad news is your expenses are too high or not high enough, and we'll get into that. The good news is that your rents are too low. That at third, I mean, when I owned the Concords, man, I was getting 11 for a 2-bedroom, like an 800 square foot 2-bedroom. My guess is that if you're building new construction 3 bedrooms under today's codes, you're probably 1,500 square a unit, right?
I was being conservative, but that's good news.
Am I right on square footage?
What's that? I didn't hear you.
1,400 square foot.
No, Matt. I was I was trying to be at about under $3,000. 3,000 square feet for the entire building. So about 1,000 square foot a unit, based on the preliminary.
You're gonna build a 3-bedroom at you're gonna build a 3-bedroom 1 bath at 1,000 foot.
Yes. That is the preliminary.
All right. Okay. Okay. All right. I'll back up a little bit. Because You could probably push to 15
Okay.
on rents. But yes, Joe, that is the package. Look, it's on LoopNet. If you guys are interested, I can get you more information on it. And that just email me at info@DeRosaGroup.com. And that, so because the seller is, he's a friend of mine. He's just looking to sell. Okay. Let's just run with your number, right?
Okay.
The 1350, which is 6,000. Okay.
Yes.
Like you said, 72. Okay.
Yes.
$72,000. Okay. And by the way, for my editor watching this, if you guys are at all able to start pumping these numbers up on the screen here, you guys would be my best friend. That is a Class C asset, the Concords, all day long. So 72. First thing you got to ding yourself on here is vacancy, right? So we're going to, I'm going to hit you for 5%. Okay. Vacancy. All right. So that's 36. That's 3,600. Okay. Then I'm going to take out. Okay. The biggest thing you can do for yourself on construction is insulate those units really well. To do higher end energy insulation. And if you can, design in a water meter system where the tenants pay their own water.
Yes. That's already.
So you have zilcho utility.
Exactly, definitely.
Right.
I'm not sure if there'll be a common area depending on the overall layout, but that was one thing I made sure I pointed out to the modular guy, and he said yes, that can be done.
I use a modular.
Preliminary, we're at about $80 to $90 a square foot finish. Those are pretty good numbers, right? So
I want that guy's number.
Okay, I'll send it to you. Well, who knows? That may change, but that's the preliminary number.
I'm trying to build a bunch of townhouses not too far from there.
Okay, really?
And I can't get numbers below $120 a square foot.
Yes.
Now for modulars, for stick frame.
Yep. He said modulars are a little cheaper, so he told me 80 to 90. I kind of went in. Okay, that's probably going to be 100. Because we'll see.
Yeah. Well, you got to do. The problem is you got to do your site prep, right?
Yes.
For modular, he's factoring in getting you the boxes from the factory, craning them in, mating them together. And calling it good, right? Exactly. You got to factor in your cost for digging a hole in the ground, for pouring it full of concrete, for putting the utilities into the connections and everything that. Exactly. Yeah, man. So anyway, I digress. But hey, it's a good conversation.
Yeah.
Okay. So going back to your numbers, 72,000, 3,600 for that for vacancy, right? All right. Now I'm going to throw out, I'm riffing. So if anybody watching right now, throw out some other expenses that we might have missed here. I'm going to throw in insurance. And I'm probably going to hit you because it's new construction and everything like that. Probably 500 a door, maybe.
I kind of thought about
1,500.
25. Yeah, 2,500. Okay. So that's 20. Okay. That's good.
You went 25?
I kind of went 20, anywhere from $25 to $3,000 roughly,
Okay. Yeah. Joe, keep typing them in. Thank you. But type them in as we say them. Don't type them all in one feed. Just type them in as we put them out there so people can see it. Vacancy, insurance, maintenance. Even though it's new construction, believe it or not, these units are going to need something done. You're also going to have to cut your grass. You're going to need to shovel the snow.
Sure.
You're going to need to, even though it's new construction, you're going to still have toilets clog and things happen or whatever it is. So
for sure.
Typical maintenance on a newer product is about 500 a door. But I think that given, 500 doors is about right for a triplex. I mean, you're going to have you can't send somebody out for less than like $300, right?
Okay.
All right. So I'm going to hit you another $1,500 for maintenance. Now, the biggest thing that people miss in small multi like this is the cost to turn an apartment, right?
Okay.
You're going to move, Joe Smith's going to be living there. He's living there for a couple of years or for a year or so, and he's going to move out. You're probably going to turn about 30% of your units a year, which means you're probably going to have about 1.5 move-outs per year, even on new construction. And you're still going to have to, dress it up and return it. And I think it's going to cost you, let's just say high side, I don't know, another $1,500. I'm going to ding you, man. I'm going to hit you
$2,000 easy.
I'm going to say $2,000. I'm going to come at you for $2,000, right? $2,000 for turns.
Okay.
And God willing, and the creek don't rise, that you can only have to turn one a year for that. Right.
Yeah.
Are these units going to have a common area, or is it going to be townhouses with private access?
Townhouses with private access.
I like it. Okay, good. What am I missing, man? Jeez, I'm getting tired. Okay, well, water, no. Yeah, you ever bought through an auction? How does it go? Adrian, you are off topic, brother, man. I love you, but I can't go there right now. And help me with these expenses, Adrian. Let's see what else. What am I missing, man? What else did you have in yours? Taxes. Oh, taxes. You said tax.
I kind of, let's say
$6,000.
15K. Yeah, let's say, well, 6 plus the existing duplex. So
no, because you're only at Oh, is the duplexes included in this?
Yeah, well, it's on one parcel. So yes. So, but the structure will be separate.
So the 72,000 is the duplex also? Is it all 5 units?
Everything. Yes.
Oh shit. Okay, that changes everything. Okay.
Yes.
Vacancy insurance, I'm off. That's $2,500, like you said. Maintenance, because you've got to maintain an old duplex and then 3 new construction doors. I'm coming at you a lot higher now. You're going to pay $5,000 in maintenance. And turns. That's 2,000. I'll let you keep that number, my friend. You get to keep that. And then you're going to have to pay water on the duplex.
Yes.
Right.
Which is that's pretty good. Those tenants, it's about 150 a quarter. So that's pretty.
So $600. Now Joe is reading my mind, and he's throwing out there about common area utilities. Even though you're going to try and design this out, you're going to have an electric bill somewhere. I promise you. Even if it's the basement of the duplex or whatever it is. That's going to cost you about probably $50 a month. So that's going to hit you about another $600. So I'm going to come at you at $1,200 all in for utilities. Now, you need to assume management. Adrian and Joe are both asking about management here, right?
Yes.
Management. Okay. Now, and by the way, the reason why you have to pay management, and you're like, I'm managing myself. What are you talking about? You are, but any bank that values that deal and any appraiser that values that deal is going to put in management. And the reason why they're going to do this is, God forbid, they got to take this property back from you. They're not going to manage themselves.
No, sure.
You're managing yourself, but they ain't going to do that. Okay.
So that's going to be 10%, anywhere from 7 to 10%.
10 on this size asset, 10 underwrite. I mean, I got a cheaper manager than that, but underwrite that at 10%. Right. That, my friend, is $7,200. Boom. Tell him what he's won. And then taxes, right? Sorry. Taxes, you said, I'll go 13.
Yeah, 13 is fair, please. That's fair.
I think it's high, but I think you can get it done for less than that. And I would even lawyer up if you don't, if it's CapEx for older units. Thank you, Adrian. I probably would throw in the new construction. You're going to be good to go for a while. You're going to have a warranty from the manufacturer on this.
10-year warranty. Yep.
Yeah. It's a 2 and 10. So I probably would throw $400 in CapEx, maybe at the let's just call it $1,000 a year. And capital expense reserves. And the best thing you can do to reduce that a little bit, Dwayne, is when you go and redo this property, throw a few dollars at the duplex. If the duplex's roof is more than 10 years old, replace it. If the windows are old-ish, replace them. If the furnace that heats both those units is the duplex all separate utilities?
Yes, duplex is all separate utilities. Okay. And a new.
So look at the heating units.
When I close. Yep.
The biggest thing that's going to cause the biggest price tags on rental properties are 3 things: roof, windows, HVAC.
Okay.
Right. Aside from capital improvement upgrades like new kitchens, things like that. The biggest things that can cost you a big nickel and are not going to add value to the property, like a new kitchen. Be like, well, what about new kitchens? Yes, but that's value add, right?
Sure.
A new heater, a new furnace is not value add.
Gotcha.
So what was I going to say? Is the duplex central air?
No central air. Just heating only.
Okay. Consider it. Right. Okay. CapEx is $1,000. Okay. Let's add all this up. 72,000. Right. I just came at you, didn't I? Let's see. All right. So I'm at 3,600 for vacancy. I'm at 2,500 for insurance. I'm at, again, this is where it takes to get real to run the numbers on a new construction project, right? Definitely. I threw another $2,000 at you for unit turns. I threw another $1,200 at you for water. $7,200. Tell him what he's won for management, and then real estate taxes. The king Welcome to New Jersey. There it is, 13,000. You are magically exactly where I thought you were going to be. You're at a 50% expense ratio. When you said $2,000 at 20 grand, I was about to say, let's just bottom line it and go 30 and go 50%. No. Okay. You're at 3450.
30,
So
I was, 34.3 or something like that.
Yeah, minus 7,200. Okay. So 72,000 minus 34,500. So you are at a NOI of 37,500. Are some of the comments coming up from Facebook or BP, because you can't see the comments? You should be able to see them all in you know what? I'm sorry. Yes, there's Facebook. This is a live stream. So there's Facebook, there's YouTube. That's a lot of feeds coming at us. You might not be able to see all the comments. Okay, good. So 37.5. Now I divide that by a cap rate of I think you're at 0.08. You are at a whopping 468,000 in valuation. Now I think he told me it's going to cost you 200 grand to build the property, right?
Well, about 200 to 250, depending.
That's fine. What'd you pay for the duplex?
125. I have 90K debt in that duplex right now.
Oh, dude. How about you make 120,000?
Yeah. That's what I thought, man. I thought it.
You thought it was gonna be more. You thought it was gonna be less than that.
Yeah.
You were over simple.
I was at a 10
you were over conservatizing yourself.
Yes.
Selling yourself short, Dwayne.
Sure.
Selling yourself short with a
that works. 468. That works, man. That works very well, right?
Dog go hunt, right?
Yeah.
I think that's legit. Now, if you put it on the market, I don't know if you're going to get it.
No.
But I think that any appraiser is going to look at that and value you right around $500,000 all day long, man. Cool. All day long.
Cool. Great.
So then let's keep going, because the audience really wants to see this. So let me just summarize the whole thing here, okay? Just for my audience. So I got a property that my man Dwayne here paid how much?
128. 128.
Okay.
Yep.
$128. He paid 128. My video editor knows what to do when I do this. 128, right? He's going to go build, let's just say, for another 250. So 128 plus another 250 in construction cost, right? Okay. So he's in it for 378. Now, I am making a big capital A assumption, Dwayne. Okay. Yeah. Because you know what happens when you assume? You make an ass out of you and me. Okay. Yeah. Get it? Okay. Right. Yeah. But what I'm assuming is that all your carrying costs and all your insurance and all your permits to the lovely township of Ewing and everything like that and all that jazz is in that 250. Are you okay with that?
Yes.
You sure? All right, cool. But carrying costs, hard money. How are you financing this thing?
Well, that's another question I had for you. I have a private lender that is willing to fund the deal. However, I called a hard money lender, and I thought it was a no-brainer. But he didn't like my valuation because he looked at the valuation based only on the acquisition of both units. He didn't like the valuation based on the NOI. So they didn't want any part of it. So I called I'm waiting for another call back, but I do have a private lender who said I have to go through a few more steps, submit a bunch of drawings and do things in a different manner, but they are interested in funding the deal.
Okay.
Yeah.
Okay. Good.
I thought, honestly, Matt, sorry to cut you off. Honestly, I thought a hard money lender would have been all over it. Honestly, I mean, based on this, to me as a numbers guy, I thought it would have been okay. Sure, if you're all in at 250 and they want points, they want 8 or 10% at the end of a
depends on how much they'll let you roll in the deal.
Exactly. But then they looked at me as a younger investor with no experience, and they kind of said no, they didn't want anything to do with it. But I was just one.
You got to find somebody that believes in you, man.
Sure. Definitely.
So the thing that I had the slight tangent, but it's valid.
Sure.
The thing that I had show up with modular construction that I had a bank have a problem get their head around is how do they, because the modular company is going to want to check while they're building these things, right?
Exactly.
And so having a lender to be okay writing a check for something that's not sitting on the dirt.
Got
right?
you.
Right.
Mhm.
Like how they like this, like, well, how do I collateralize that? How do I put a lien on something that's over there in the factory?
Yeah.
Now you talk to your modular company, they've got ways to do it. They can float a bond to the lender and stuff like that. And there's ways around that. So let bottom line it. Adrian or Dwayne paid 118 for the land.
128 for the duplex.
Okay. 128, 250 for construction, right? So Dwayne's all-in cost is 128 plus 250. Okay. He's at 378 all in. Okay. Now, like I said before, he's valued at 468 here, guys.
Yeah.
So if I take it, what did I just say you're valued at, or your all-in cost?
378.
378. Okay. You made 90 grand. Okay. You got 90 grand in equity. And when you refinance this property, you can probably finagle it if you can get an 80% LTV loan. It's going to be hard to do with Corona crazy and with the wacky world we're in these days. So if you're at 70%, 75% loan to value on my math, you're going to be into the property 10 grand out of pocket to own a property that's producing 36,000 a year.
Yeah. Sounds good.
Better than a sharp stick in the eye, huh?
Very much
right.
so.
Okay. Okay. First of all, questions. There's a lot of feed here. Dennis wants to know, does it add value to install central air all day long?
Oh,
yes.
Sure.
Well, think about this, Dennis. I'll turn it around on you, right? Would you pay me $50 more if I took you, and I'm sure you live in a place that has central air, but if you didn't, would you pay me $50 more if I gave you central air? Of course. How about 150? Maybe. Right? Tenants will pay more for central air. You get asked the question, what do tenants pay more for? They'll pay more for dishwashers and central air and life amenities, washer dryers. By the way, make sure you put washer dryers in these apartments and these things you're building, because you can attract higher end tenants, right?
Sure. Yeah.
Okay. Cool. This is good, man. So bottom line, man, you built a 5-unit property, almost no money out of your own pocket, no money down, 5-family, new construction. I love it.
Yeah. So far, that's kind of where I am. I knew my valuation could have been pretty close. I wasn't sure if we were going to trade at like a 9. I even heard it could be up to like a 12. And I said, oh my gosh, a 12.
New construction. Jeez, come on.
Yeah.
That's crazy. Yeah. That's crazy. Trenton's trading lower than that on cap rate wise. It ain't that bad. No. Joe, this is Ewing, New Jersey. Adrian is recommending a laundry room in the basement of one of the buildings. Now, Adrian, that's not a bad idea, but the thing is that what's that?
I thought about that as well, but
that's revenue. But first of all, a couple things. Then Dwayne has to build a basement in this building, which is going to cost him a lot in construction to dig a hole. If you're doing new construction like this, a lot of times he can build them with what's called a slab on grade, meaning like literally just level out the concrete and drop the boxes. But the modular company is not going to want you to do that. They're going to want you to build something called a rat slab or something like that, where the properties are elevated a little bit. And there's like a 4-foot clearance below the dirt and where the property starts, so they can make their connections and everything like that. So building a full 9-foot ceiling basement is going to be something. You don't want to deal with all that, I don't think. I think I'd rather see you do a little utility closet or just put a washer dryer in the bathroom,
Correct.
So
yeah, makes sense.
Cool. Ewing would be curious to chat about the building costs if you guys are seeing if it's worth it. Yeah, Joe, he's building modular. We'll have to talk more about this one with you, Dwayne, because I'd love to hear more about who the modular company you're talking to is in that. And here's what I'll do. I'll even give you a little plug, because I'm going to blow up your phone now and make you popular with all these new friends that you got here. How do folks get a hold of you? If people want to talk to you about building, people want to talk to you about Mercer County, New Jersey, Trenton, that whole area. How do folks get a hold of you?
Primarily Instagram. I'm on Instagram. My name is one rental at a time NJ. It's 1_rental_ at a time, pretty much underscore in between each word, at a time New Jersey. There's only me and another person with that name. So
one rental at a time NJ. All right.
Yep, correct.
Cool. Get a hold of Dwayne on Instagram, guys. Send him a private message. Pick his brain about new construction. Pick his brain about New Jersey. It ain't that bad. I made my living in New Jersey for a long time until we expanded a bit and all that. So you are well on your way, Dwayne. I want to see some updates, and maybe once you break ground, give me a holler. I'll come out there and I'll shoot a live session for the YouTube channel from your construction site. What I'd love to do is to do a YouTube video as they're setting the boxes.
Cool.
How cool would that be? Right?
Oh, that would be great. Oh, I'll definitely give you a shot, Matt, for sure. Cool. I have one more quick question, Matt. If I wanted to potentially use private money or try to syndicate this deal, and I have read your book and it was amazing. So I'm curious, like,
have you written a review on Amazon yet?
No, I'm guilty. I have not. I will.
That's okay. I forgive you.
Thank you.
Please do.
Yes, we'll do. So I'm kind of thinking like, okay, I can come up with some cash. Maybe I have some family or friends who are interested into the deal. I guess I have to just go out there and just try to sell it in a sense, right?
I wouldn't do that. No? I would borrow this money. Why do you do? First of all, I don't know if you really need. If you got a hard money lender, I wouldn't. I don't know how much equity you need. I'd rather see you retain as much of this asset as you can. Right?
Makes sense. Yes.
My 2 cents. Sure. But you could offer a little bit of JV. Meaning like, okay, loan me money, loan me 50 grand, whatever. I'll pay you a rate of return on the money while I'm building this property. Because if you're smart, you keep the duplex operational and keep the duplex cash flowing, right? Yeah. While you build these new units. So you can afford to pay some VIG on the 50 grand or that they loan you. And then get them out of the deal on the refinance when you refinance, because you're going to build it. This is like a Burr strategy on steroids. Okay.
Yes, that's the same thing I call it. It's Burr on steroids.
That's what it is, right? Yep. You're going to refinance it and get that 50 grand out and give them just a little bit of toehold in your new project, but you should keep the majority of the equity, because it seems like you've got a pretty good Burr thing going on here. So somebody pumps in 50 grand, they don't need to be 50-50 with you.
Got you. Makes sense.
All right.
Okay.
Cool.
Very good.
Good stuff. That's what we got today, guys. Joe, I'd love to talk to you about Fayetteville, but you're going to have to come on the show or join our insiders community. If you want to talk about Fayetteville, go to DeRosaGroup.com/insiders. And I'd love to talk to you about apartment buildings that we have. Dwayne is already a member of Insiders. And if you guys want to submit a question to help me at DeRosaGroup.com and want to join our insiders community too, don't forget, those that submit questions get a free 1-month membership to Insiders. And you guys can come join and pick our brain. We do weekly brain picking sessions. We do live sessions. Dwayne, have you been a member of Insiders for a little bit, or did you just join?
About a month. But
how's it going so far?
I love it, Matt. It's amazing. Good. I mean, with everything that's changed now with Corona, and just for investors like myself who are experienced or not as much experienced, to stay engaged, right? And see everything you guys are doing in North Carolina, doing your DD process and all that. It's been great. It's definitely worth the value. I don't want to, I'm plugging you, but I'm not just saying that.
No, I know. I didn't give Dwayne $1 or whatever for saying that. I just appreciate your authenticity, man. Sure. So come join us at Insiders, DeRosaGroup.com/insiders, or simply just submit a question to help me at DeRosaGroup.com, and we can come here and chat, have some laughs, and you guys can get a month worth of Insiders for free. So thank you, guys. Dwayne, thank you. I will see you around town, hopefully face-to-face, and see you on Insiders soon. Thanks for coming on the show.
Thanks, man. I'll keep you posted with the construction and all. And when those boxes get delivered, you'll definitely be there to capture.
Hit me up, and I want to talk to your builder, because I got a job that we're doing not too far from there that I'd love to run by him.
Great, sounds good, man. Thanks again, man. Thank you.
Cool. Thanks, Dwayne. Okay. Thanks for coming on the show. Guys, that was awesome. That was incredible. That was a great talk about new construction Burr, new construction cash flow, great ways to do deals for real estate. And what's great is that you don't have to aspire to go buy a couple 100-unit apartment complexes to be successful in this business. You can do what Dwayne's doing, and Dwayne's going to retain a lot of that asset, if not all of it himself, and do really well for himself. So I cannot wait to see where Dwayne ends up. Keep an eye on that guy. Hit him up on Instagram. We've got his Instagram handle right here on the Facebook feed too. Thank you, guys. Again, help me at DeRosaGroup.com to join us here on the show. I'd love to have you guys come and sit with us and join us for the Mentorship Monday program, and also join us on Insiders. That's what I've got for you today, guys. Thanks for watching, and have a great and profitable week.